To remain updated with the latest business news, click on the bell icon.
Hello and welcome to Business Today. You're watching Ask Udayan, the show where we answer your questions on stocks. I'm Ava Bakaya, and with me, our very own global business editor, Udayan Mukherjee. With the markets continuing to be volatile amidst mixed global cues and fresh concerns around the coronavirus, how can you continue to make the right investment decisions and adopt a balanced portfolio approach? Do send us your questions on the number on the screen. We'll answer a select few on TV and online every Wednesday. So let's begin with our viewer queries. Our first question today, Nitesh Agrawal from Noida. He wants to buy IEX. The current price is 717. Also, the PE is around 80. So he's asking, Udayan, is this the right time to buy?
Hello Udayan, this is Nitesh from Noida. I want to buy IEX, but the current trading price is 717. Also, the P is around 80. So, the P seems to be on a higher side? Is it a good time to buy?
Well, you seem to know a lot about the company, Hitesh, already. And you're right in pointing out that the valuations are quite high. In fact, the stock has done remarkably well over the last 1 year or so. Deservedly too, I would imagine, because it really is a very good franchise. It's India's #1 power exchange with a 95% share. I think for the next 3-4 years, unless something goes terribly wrong, we can expect 30% plus compounded growth in profits, clean profits over the next 3-4 years. It's got a squeaky clean balance sheet, debt-free. It's got return ratios of about 50%. And after the recent ruling between CERC and SEBI, which allowed derivative products in electricity trading, I think they're on their way to launching some really interesting products as well. So the market share already is strong. They're growing the market, they're growing their share, and they tick all the financial boxes as well, save one, which you mentioned, which is the valuation. So I don't know whether enterprises like IEX will give you great entry points, as in very soft P multiples to enter. But now we are going through a correction in the market. IEX has gone up quite a lot over the last 1 year. If it pulls back meaningfully, I think it would be an opportunity to probably load up on what looks like a very, very good franchise.
All right, Anuj Tyagi has also got a question. He's from Gurgaon, and this one's on REC.
Hi Udayan, can I buy REC Limited at current levels?
Well, unlike the previous power sector stock which I spoke about, IEX, REC's growth metrics are quite disappointing. They don't enthuse me too much. If you just look at the next couple of years, what is expected, I don't think we are going to get any serious earnings growth from REC over the next 24 months. It's also a kind of a stodgy kind of business because they struggled with their non-performing assets. It was as high as 8% just a couple of years ago, which they seem to have got under control a little bit. But I don't see it as a great lending franchise. The only thing, it's actually a mirror image of the stock we spoke about last, which is IEX, where the franchise is strong, but the valuations are very steep. Here, the franchise is iffy, but valuations are great. I think you can buy REC at less than half times book, 0.4 times book. It has a dividend yield of close to 8%. So all of those metrics are very, very appealing. And that's probably the reason why a lot of people buy REC for very, very tempting valuations. But I think it slips up on growth. And in my book, that's the more important factor to be focused on, whether a company is likely to deliver growth or not. And on that, I would say REC probably deserves a pass.
Sumana Roy Chaudhary, Navi Mumbai, has also written in. Let's hear out her query.
I bought 500 shares of DCP Bank at rupees 92. Is it right to invest in this share for the long run? Please suggest. Thank you.
I'm not a big fan of DCB. I know a lot of people have bought all these banks, the smaller private sector banks, hoping to bag the next HDFC bank. This has been a thing in the market that you don't buy the best banks because they are very expensive, and you buy the smaller ones hoping that they will one day become the big ones. And DCB falls into that category. No wonder it is consistently disappointed. I think the stock is down nearly 30% over the last 1 year. It is just not delivered, not on the stock price performance, and therefore, and of course, because it has never delivered on earnings or asset quality. Even now, I think it's trying to go slow on the corporate and SME book. Slippages are still running fairly high compared to many other private sector banks. So I don't think it has its act together really, to put it strongly, on the asset quality front and the asset management front. And therefore, despite the fact that it's trading at 0.6, 0.7 times book for a private sector, which is cheap, I would say that at that valuation, you're better off looking at the larger PSU banks, even compared to the smaller private sector banks. So no, DCB's price performance, the fact that it's consistently grinding below the 100 rupee mark, I think tells you a story, and you should go with that story, that it is probably not the best banking franchise in the private sector to be looking at.
Okay, Sachin from Pune has a query on Delta Corp. Let's listen in.
Hi, my name is Sachin and my question is about Delta Corp stock. I have bought 250 shares of Delta Corp at the price of rupees 251. So can you please advise if I should hold this stock for short-term profit, and if yes, what should be my target price? Thank you.
Well, it's always difficult to give any advice on the short term, but I think in the short term we are about to face volatility on the Delta Corp stock, because it's a sentiment kind of a stock. When the going is good, markets are open, everything is open because COVID is on the back foot, then Delta Corp tends to do well. If there is the possibility or the prospect of another wave and maybe restrictions on people's movements, all of those things, then Delta Corp tends to underperform. And given that Omicron is spreading, and there is a feeling, at least, we don't know how it will play out, but there is a feeling that it might lead to a concerning situation. I think in the near term, which is what you seem to be focused on, Delta Corp might struggle to perform. Overall, it's always been a sentiment, mood, theme kind of stock. People will tell you that for such a small market cap, you can buy such a great percentage of India's casino business. It's difficult to debate that point of view. It helps that India's best known investor is also a major shareholder in Delta Corp. But that aside, if you look at profit delivery, then it becomes more tricky to go and become very bullish on Delta Corp. In any case, I think there are better consumer franchises to be looking at in the market over a long term. In the short term, I think Omicron and COVID might create near-term volatility. Given the fact that the stock has performed quite well over the last 1 year, some near-term profit taking and near-term price erosion is not inconceivable at all. So I think you need to be a bit careful with that one.
That's all we have time for on this edition of Ask Udayan. Udayan, thanks so much for taking all those queries, and we look forward to hearing from you. Do remember to send in your questions on the number on your screen. Back with more next week. Bye for now.
If you like the video, do like, comment, share and subscribe.